Welcome back to the Noob Selling Options channel, everyone. Man, I am just absolutely thrilled to have you here today. Look, let's jump right into this brand new explainer because we have got something massive to celebrate. I mean, we are looking at a brand new, spectacular all-time high for the portfolio. The markets have been completely wild lately, right? But our strategy, it's paying off in a monumental way. So today, we're going to break down exactly how this victory was constructed. And then we're going to look at a truly epic corporate battle unfolding right inside our own holdings.
Okay, so here's our roadmap for today's explainer. Welcome and portfolio victory, followed by the AI Fortress breakdown, then sluggish crypto, strong foundation. After that, we'll dive into the battle for number 2, why ServiceNow could win, and we'll wrap it up with the flippening scenario. Let's get right to it.
Section 1. Welcome and Portfolio Victory.
Guys, we have officially crossed a major threshold. We just brought the total portfolio value to an unbelievable $274,204.35. I mean, wow. If you're a regular here on the Noob Selling Options channel, you know exactly how hard we've worked to build and track this allocation. So hey, please take a quick second to like this explainer and hit that subscribe button so you never miss an update as we keep tracking these all-time highs. Your support literally means everything, and it's what keeps this community growing stronger every single day.
Okay, let's look at the proof. This right here is our May 30th, 2026 tracker snapshot. Just look at those numbers for a second. Now, what's incredibly impressive about hitting this milestone is that we pulled off this massive momentum despite some real sluggishness over in the crypto space recently. You know, we actually didn't need the whole market to be flying because our strategic allocations executed flawlessly.
And this brilliantly illustrates exactly how we did it, the barbell strategy. So our AI Fortress makes up 66.41% of the portfolio. That's our rock-solid, resilient, cash flow-rich foundation, taking up basically 2/3 of the book. Then on the flip side, at 33.59%, we've got our crypto stocks and ETFs. That is our aggressive growth engine. By balancing this massive tech foundation against the volatility of crypto, we get to capture these macro waves without, losing our shirts when one sector decides to take a breather.
Moving on to Section 2, the AI Fortress breakdown.
All right, let's pop the hood and see exactly which heavy hitters are actually driving this performance. Here is the high-conviction tech infrastructure making up our fortress. Advanced Micro Devices, AMD, remains the absolute unshakable kingpin of this portfolio. It is sitting comfortably right at the top at 18.82%, which is worth over $51,000. Crazy, right? We've also got really solid pillars in Amazon and Meta. But I want you to look closely at those second and third spots, Alphabet and ServiceNow. That is where the ultimate drama is unfolding right now. But hold that thought, because before we get to that epic showdown, we got to check in on the rest of the portfolio.
Section 3. Sluggish Crypto, Strong Foundation.
So let's talk about the other side of that barbell strategy, our $92,000 crypto segment. We've built a rock-solid base of direct spot ETF exposure through IBIT, ETHA, and BSOL, and that alone makes up over 19% of the total portfolio. Then we have Circle, CRCL, acting as this massive equity proxy anchor at 8.25%. And down at the very bottom, well, that's where we keep our high beta leverage plays to really juice pack our upside during those wild momentum swings. Look, yes, crypto has been a little sluggish lately, for sure, but our AI Fortress is easily carrying this temporary weight.
All right, Section 4, the battle for number 2.
This is, without a doubt, the most thrilling drama unfolding inside the AI Fortress right now. Let's trace the journey of ServiceNow, ticker symbol NOW. For the first 4 months of the year, there was just immense skepticism. You had these macro fears whispering that generative AI was going to cannibalize software seats and completely render traditional workflow tools obsolete. And the stock? It took a brutal beating. It hit a 52-week floor near $81 early in 2026. But then came the reckoning. In late May, ServiceNow ripped through the bears with a historic 14% surge in a single day, completely capping off an astonishing 40% gain for the month. The market finally woke up and realized that AI is not eating ServiceNow. ServiceNow is actually eating the enterprise AI value chain.
Now I want you to focus on this single razor-thin number, $326. Alphabet has held a really comfortable lock on the number 2 spot in our portfolio for the longest time. But following this historic May breakout, ServiceNow has closed the gap. Literally, just $326 in total portfolio value is all that separates our challenger, ServiceNow, from completely dethroning Google for the silver medal.
And listen, this isn't just about the numbers, okay? This is a fundamental philosophical clash of business models. On one side, you have Google's infrastructure monopolization. Google has this massive cloud power, sure, but they have to constantly defend their territory in these brutal CapEx wars against Microsoft and Meta, all while dealing with serious margin pressure on search. On the exact opposite side, you have ServiceNow's application monopolization. They literally own the proprietary back-end structures of the world's largest institutions. Think about it. You can swap out an AI API overnight, but you absolutely cannot rip out the foundational workflow engine of a Fortune 500 company without completely halting their global operations. That right there is a moat of pure enterprise friction.
Section 5. Why ServiceNow could win.
Let's dive into the pure financial alpha that's powering this explosive challenge to Google. The fundamentals here are just absolutely screaming. Customers are not abandoning ServiceNow, they are upgrading desperately. They're willingly paying a massive 30% price premium just to access Now Assist AI features. On top of that, ServiceNow is operating as this pure-play B2B scaling machine with blistering 81.5% projected gross margins. In their current remaining performance obligations, they jumped 22.5% to over $12.6 billion. Every single dollar flowing into Now is locked into multi-year enterprise commitments. It's wild.
To really visualize the sheer scale horizon of this metamorphosis, take a look at this guidance upgrade. Management completely shattered conservative estimates. They raised their 2026 AI-specific revenue guidance by an unprecedented 50%. They took their target from $1 billion and vaulted it straight up to a staggering $1.5 billion.
And that brings us to what might be the most incredible irony of this entire showdown. We call it the agentic innovation paradox. Get this. Google itself actually just named ServiceNow its 2026 Partner of the Year for Agentic Innovation. I mean, think about that for a second. Google provides the raw compute power and the foundational language models, right? But autonomous AI agents don't just live in a vacuum. They have to actually execute tasks. And where do they execute them? Right inside ServiceNow's workflow data fabric. ServiceNow has essentially positioned itself as the definitive AI control tower.
Section 6. The flippening scenario.
All right, let's set the stage for the climax of this corporate civil war. Here is the exact play-by-play of how ServiceNow could permanently overtake Google in our portfolio. Because of our specific share counts, we're holding 300 shares of Now versus 100 shares of Goog. All it actually takes is a simple $1.10 relative price movement in ServiceNow's favor to trigger the flippening. If ServiceNow breaks out past its critical post-earnings momentum resistance, while Google naturally consolidates its heavy CapEx spending, well, the hierarchy of our AI fortress is going to permanently shift. The application layer will have officially conquered the infrastructure layer. As the source material so perfectly states, have your allocations locked and loaded. This is macro execution at its absolute finest. Guys, we are watching a truly historic portfolio shift play out in real time. ServiceNow isn't just recovering, it's proving that the closer you sit to the actual execution of business workflows, the more irreplaceable you become. You absolutely have to stay vigilant here.
So I want to leave you with this final thought and a question. What is your move right now? Are you looking to rebalance or maybe trim some of these high beta gains back into the mega cap anchors? Or are you just letting these massive winners ride for the next leg up? Jump into the comments below and share your portfolio strategies with the Noob Selling Options community. I really want to hear how you guys are playing this historic all-time high. Thank you so much for learning with me today, and I will see you in the next explainer.